The best way to get into real estate is house hacking. In this video, I'm gonna break it down step by step so you can literally go out and do it yourself after this video. So first, what is house hacking? House hacking is when you buy a property with a personal residence loan and you live in one of the units and you rent out the other units or rooms. The whole idea is the rent income that you're gonna get from the other units or the other rooms will cover your mortgage, taxes, insurance, and other living costs, so you're basically living for free, if not even making a profit. So for example, let's say you buy a duplex for $250,000. You're gonna put 5% down, and after closing costs, that's gonna be around $15,000 for all of your out-of-pocket costs. Now let's say your mortgage, property taxes, and insurance runs about $1,800 a month. What you're gonna do is you're gonna move into one side of the duplex and live in it, and then rent out the other side of the duplex, ideally for $1,800 a month, so their rent can cover your mortgage, taxes, and insurance, and you're basically living for free. All you have to pay is really your utilities like internet, water, electricity, but let's say you can rent it out for $2,000 a month. Then that can cover all your utilities as well. There's so many benefits to house hacking. First, you can buy a property with a very low down payment. This means very low out-of-pocket costs for you to purchase a property. I'll break it down even more when I talk about loans and financing later, but just keep that in mind. Two, you're essentially living for free. So what that means is your overhead and expenses to live is a lot lower, and all that extra money you save that you normally would be paying rent or a mortgage, you can save that and let it snowball and grow and invest that money to make more money. Third, your tenant is paying down your mortgage for you, letting you build up equity for free. So for the duplex example, let's say you want to sell in 5 years. When you first bought the property, your mortgage amount might be $237,000, but over 5 years, the tenant has paid it down to $215,000. That means you earned an extra $22,000 from the equity by doing nothing, by just letting the tenants pay down the mortgage for you and the interest and principal. Fourth, the property will appreciate over time. Let's say in 5 years when you sell that duplex, it's now worth $300,000 instead of $250,000. You just made an extra 50 grand by literally doing nothing but sitting back and letting appreciation do its thing. Fifth, you get experience being a landlord. Having to rent out the other units, you learn the process of renting out the tenants, screening tenants, managing a property that's a rental property, and all these invaluable skills you'll need to be a real estate investor. Sixth, since it's your personal residence, when you sell in the future, you can potentially have all those profits tax-free. And I'll break that down later as well. So now that you see house hacking has so many benefits, let me break it down on how you can actually do it. First, you can go on Zillow or Realtor.com and search in your area for multifamily properties. They should have a filter that drops down. You can click it and filter out only the multifamily. Now the properties you want to focus on are duplexes, triplexes, and fourplexes. These are properties that have 2, 3, and 4 units. The reason we focus on these units is because these units can still qualify for a personal residence loan. Because anything 5 units or more is considered commercial multifamily, and you cannot get a personal residence loan for those. Now, if you're cool of renting out other rooms inside the same house as yourself, this opens up your pool of possibility to a much larger range. Another way you can do this is to buy a 4 or 5 bedroom house and then rent out all the other extra bedrooms, and that can still cover your mortgage and living costs, and it's also another way of house hacking. However, a lot of people don't like this because they don't like sharing personal space like bathrooms or kitchens or inside a house with strangers. However, that's exactly what I did when I bought my first personal residence when I was 25 years old. I bought a 4-bed, 2-bath house where I stayed in the master bedroom. I used one bedroom as my office, and I rented out the other 2 bedrooms for $500 a month each. And this extra $1,000 a month covered my mortgage and utilities. Yes, living with roommates is not ideal, but if you're young and you're fresh out of college and you're used to living in the roommate situation, it's an easier transition to do that now before you get used to living on your own and get spoiled and you can't do roommates anymore. I probably won't be able to house hack a house with roommates anymore where I'm at now, but I would still definitely house hack a duplex or triplex or fourplex if the opportunity came up and I needed to do it. Now that you know what type of properties you need to search to house hack, the next step is getting your finances in order. So yes, when you purchase a property, especially a personal residence, you're gonna need some sort of money for a down payment. However, the good news is you don't need a lot of money. A lot of FHA loan programs or other first-time home buyer programs allow you to put down as little as 3.5% of the purchase price. So for the duplex that was $250,000 for that example, a 3.5% down payment is less than $9,000. That's the beauty of being able to qualify for a personal residence loan through house hacking, is the very low down payments. There will be some other costs as well during closing for lender fees and closing costs. So just try to budget about 5 to 7% of the purchase price as a down payment in liquid cash in your bank account. Next, you also want to make sure your credit score is good. All these loans are highly dependent on your credit score, and if you have a bad credit score, it can really affect the rates and how much money you'll pay for the mortgage. Once you get that in line, start running numbers on the houses you come across when you're searching. I like to use mortgagecalculator.org. This is where you can plug in the purchase price, the down payment amount, the interest rate on the loan, and the property and taxes, insurance, and all those other costs, and you can play around and see what your monthly payment will actually be. Once you get an idea of how much your mortgage, taxes, and insurance will cost you each month, you can then look around Zillow for stuff for rent and see what kind of properties and what locations can rent for that amount or more. Because at the end of the day, the whole idea of house hacking is to be able to live for free. Once you do all this, you'll be able to narrow down the price range of the properties you can buy and the locations where you can buy it at. After that, it's just starting to make offers. Pick the properties that you like and start getting a realtor to throw in offers for you. If you want to supercharge this strategy, you can find an off-market property at a deep discount and do that to house hack. This strategy does require more time and requires you to have money to market and know how to market to off-market sellers. I go over this in my beginner to wholesaling series, and that's all on my channel for free. So check that out if that's something of interest to you. But otherwise, if you got a busy full-time job and you don't have the time for all that, just finding a property on the market is all you need to do. So my recommendation is, if you're a beginner and you got a busy full-time job, is to find a new construction, duplex, triplex, or fourplex, or something that's already fully renovated. You don't want to have to buy it and then spend the time and money to renovate items. However, if you're more handy or savvy, or you have more time and you want to get a better deal, what you can do is you can buy a fixer-upper that's listed on the market and then renovate it. This way, if you do it right, you can be in with no money out of pocket and have a lot of equity in the property. That's exactly what I did for my first house that I house hacked. I bought a fixer-upper that was listed on the market for $70,000. I ended up getting the house for $60,000 after negotiating the price, and I put in $40,000 of renovations into the house to make it livable. I then refinanced the property. It appraised out to $180,000, so I was able to pull out $140,000 on the loan. This was enough to cover the first lender that lended me the $100,000 to purchase and rehab the property, and then I walked away with an extra $40,000 in my pocket tax-free. The reason it's tax-free is because a refinance is a non-taxable event. So at the end of the day, I was in the deal with an extra $40,000 in my pocket and another $40,000 in equity in the property. And if you're thinking, wow, I don't have $100,000 cash to do this, I used none of my own money. I found a private lender and they funded the full purchase and the rehab of the property, and I was paying them 10% interest, but it was a short-term loan. Don't worry if you don't know anyone that can fund your properties. They have lenders out there called hard money lenders, which do the same thing. But keep in mind, all this only works if it's a really good deal. If it's a bad deal, then it's not gonna work. Also, if you're very busy with a daytime job, I don't recommend it, because renovations and rehabbing a house, managing contractors, all that's very time consuming, and unless you know what you're doing, it could end up costing you more time and more money and more stress. So once you find a property and you buy the property and you close on it, you're gonna move into the property, but then you gotta start getting the other units ready for rent. You can advertise your unit for rent on Zillow or on Facebook Marketplace. I highly recommend Facebook Marketplace. I get a lot of traction there when I list my rentals, and it's been a great source of finding tenants. What you want to do though is, once people start inquiring, is you want to screen these tenants. You don't want to just let anybody live as a tenant in your house hack property. You want a good tenant. Some basic criteria to look for is to make sure that their job income is at least 3 times the amount of the rent. That means the amount they make monthly is 3 times the rent. For example, if your rent is $2,000 a month, make sure they're making at least $6,000 a month at their job for them to qualify. And this $6,000 is before taxes. It's not the take-home pay that they get in their pocket in their bank account. It's their pre-tax pay, and it's for the whole household. Let's say you bought a duplex that's 3 beds and 2 bathrooms on each side, and on one side you have a couple or family that's moving in. If the husband and the wife make $3,000 and $3,000 a month each, that combines to $6,000 a month, and that's 3 times the $2,000 rent. Or if you have a group of 3 friends that want to rent out the side of the duplex and they each make $2,000 a month, that combines to $6,000 a month and they meet the income requirement. Next is some basic stuff. You don't want anyone that has had prior evictions or prior felonies to rent to. For pets, it's up to you. Pets do more damage to a unit. Yes, that's true, but it opens up your renter pool to a much larger audience. Anyone that's a potential tenant should do a background and credit check. There's third-party companies out there where they can do it all online and it'll charge the prospective tenant about $30 to do a background and credit check. I recommend at least a 620 credit score or higher, and that's a good indication of how well someone will be on paying the rent on time and stuff like that. Once you find a qualified tenant, you have to sign a lease with the tenant. What I recommend is asking your realtor for your state's rental lease agreement. Your state should have an official real estate rental agreement, but if not, you can Google a template online and use that as well. In terms of the financing, what you can do is an FHA loan. An FHA loan is for first-time home buyers. You can get as low as a 3.5% down payment on the property. This is a great way to be with less money out of pocket. Look for a mortgage broker in your area and talk to them. They can help you explain your different options for a personal residence loan, and they can find the best fit for you and your situation. They also can maybe give you a conventional loan that might be better for your situation and can be as low as 5% down. It all depends, so please just talk to a mortgage broker and let them help you get the best loan possible. Now, I also mentioned that you could possibly sell your property in the future and all your profits will be tax-free. What this refers to is capital gains on your personal residence. US law states that if you sell your personal residence, which is a property that you lived in for at least 2 years in the past 5 years, and you make a profit, a portion of that is tax-free. If you're single, that means up to $250,000 of profit is tax-free. So if you bought a duplex for $250,000 and you sold it later for $500,000, that extra $250,000 profit is going to be 100% tax-free. For married couples, the limit is $500,000. So as you can see, it's a very powerful tax benefit that it comes with only house hacking. For example, if you flip a house and you make $250,000, you're going to have to pay ordinary gains tax on that, which is a huge chunk. But with this personal residence exemption on a house hack, you save a ton of money on taxes. Like I said, the benefits are almost endless for house hacking, and this is why I think it's literally the best way to get into real estate. It checks almost every single box that you want in a real estate investment. So to recap, 1, get your down payment saved up and get your credit score right, and then get pre-approved for a loan through a mortgage broker. 2, look for multifamily properties that's listed on the market, whether it be Zillow.com or Realtor.com. 3, get a realtor to start making offers for you. And once you get an offer accepted and you buy the property, then you move into one unit and you rent out the other units for lease. Like I said, I recommend leasing them on Zillow or Facebook Marketplace to find tenants. Make sure you screen your tenants and then put them on a lease. And that's really all you have to do. So I hope this video helps and gives you the steps you need to go out and start finding your first property to house hack. If you want more free real estate advice and personal finance advice, like and subscribe to the channel and I'll have more for you.